Welcome to the Investing Podcast presented by Tusk Media. The final bell has rung and the market is now closed. So let's move on to an audio and video recap with the Investing Happy Hour.
Good afternoon, everybody. Welcome back to the Investing Podcast, now more mobile than ever, not because of your phone, but as I mentioned earlier, we've got this microphone so I can walk anywhere that I want. I don't have to trip on freestanding microphones. Really excited to be here, especially with this mobility. We're going to have so much room for activities, as they say. Going to have a lot of fun with jumping jacks and stuff like that in the mornings, but we're pretty worn out, and fortunately we're worn out from running up. It was a really, really good day for the markets. We're really excited about that. The Dow was up about 1.6%, the S&P up about 1.7%, the NASDAQ up almost 1.9%. So we're continuing to kind of shake off those losses from last week with the Brexit fallout, and I think we're almost to the point where we can stop talking about Brexit on a daily basis. So starting now, we're resetting. Not going to say the B word on this podcast unless we really, really have to. So markets were up. That was good news. We talked about a few of the winners today, and some of those winners stayed strong throughout the afternoon. We touched on them during the stock market power lunch, but Under Armour closed up more than 5% for the day. So shout out to Under Armour. Nice performance there. They were sweating it for a while, but they wicked that moisture right off. Had a good day today. I don't even know what that analogy means, but it felt really cool. Speaking of which, real quick pro tip to Under Armour. We need Under Armour material dress clothes. I don't understand why that doesn't happen yet. I mean, this is not great. It's 1,000,000 degrees outside. I had to walk all the way from my office to the studio, which is, what do you think, maybe 30 to 40 feet?
45, maybe.
Maybe 45 feet, Scotty the intern says. So we got to get something that's a little bit more advanced. Stars like me can't be sweating even in the summer. So we got to figure out some answers there. We're going to talk here in just a second about a new topic, and I was going to name this vocabulary lesson, but I ran out of room on the whiteboard. But we're going to talk about the CCAR, which is the Comprehensive, it's the first C, Capital Analysis Review. So think back to the financial crisis of 2008 when you had all of this turmoil happen. Banks were collapsing left and right. You had the federal government having to basically step in and bail out these huge banks and figure out ways to keep this economy somewhat on track. You had huge stock market fallout. Since then, regulators have come out and said, well, we want to make sure this doesn't happen again. And if it does happen again, which they really can't prevent if you think about it, if it does happen again, we want to at least be able to say, you know what? We did all we could. We even developed a little testing program for that. So what they did is they came up with the CCAR, the Comprehensive Capital Analysis Review. Now, a little insider tip here, those in the biz like us, we don't call it the CCAR, it's the CCAR. That's what we call it. That actually released their results today. So it was CCAR day for the markets. Banks did well. 31 of the 33 major U.S. banks passed. That's good news. So 31 out of 33, if you do the math on that, I think you're at like 94%, passed the stress test. A few banks were slapped on the wrist and told, hey, do better next time or else. But the big news there is that with these passings of these exams and of these tests, because it's not just a test, it's an analysis review, when you pass that, you get the rate to basically raise dividends and do all kinds of other good things. So if you didn't realize that, banks have been having to keep dividends basically artificially low. So combine that with a rallying market and now, hey, we can issue some more dividends. That's good news for banks who are in desperate need of good news, especially after the B word that happened last week. So we're excited about that. Congratulations, banks. You can raise your dividends, at least to some extent. And that's good, especially because we don't think interest rates are going to be rising anytime soon. So if you're an outside investor and you know that banks are going to make more money when interest rates do expand, when they do get wider, you've been a little bit hesitant to invest. At least now there's a chance that you're going to get a better dividend for your money. And that's a great timing for that because we're not going to get a lot of yield in traditional fixed income markets. Speaking of which, Bond Week, everybody. Did you realize that Bond Week lasts a whole week? It's nuts. We've done 2 episodes on bonds. Episode 1, what are bonds? Really deep, life-altering philosophical question. You need to listen to the interview and the discussion between me and Matt Burton. Number 2, we talked about different types of bonds. So we talked about issuers and characteristics of bonds. Today we're coming at you with municipal bonds, and that episode is going to be up in just a couple of hours. Really excited about that. If you're a client of Narwhal, you know that we love municipal bonds. So we're going to talk about why we love them and all the different intricacies of the muni bond market and muni bond issues and all that good stuff. So check it out, hit subscribe, leave a 5-star review. We're going to be back with that later tonight, and we'll hit you 3 times tomorrow with the market updates. Y'all have a great night. Thanks for being here.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are our professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.